The richest athletes in the world just quietly lost hundreds of millions to a tax loophole they thought was protecting them. Cristiano Ronaldo signed what looked like the greatest financial deal in sports history. $500 million. No income tax. Saudi Arabia doesn't have one. But here's what nobody told him, and what nobody is telling you. The country you earn money in is only half the story. The country that owns you is the other half. Ronaldo is a Portuguese citizen. Portugal has a tax treaty with almost every nation on earth. And Portugal has a very long memory when it comes to its own people getting rich abroad. Here's where it gets complicated. Saudi Arabia has no personal income tax. That part is real. But tax-free in the source country does not mean tax-free everywhere. It never did. When Ronaldo eventually moves that money, wires it to European accounts, buys property, invests in businesses, repatriates anything, multiple tax jurisdictions wake up simultaneously. Portugal, Spain, where he lived for years, and even the United States through investment income rules can all assert a claim on portions of that fortune. And that's not even the strangest part. Spain's Hacienda, their version of the IRS, already went after Ronaldo once. He paid nearly 19 million euros and served a suspended prison sentence. That case was built entirely on earnings Spain decided were taxable on their soil, even when the money moved. This is called the source country rule. If you trained in Spain, if your image was exploited there, if you had a company registered there, Spain taxes that income. Geography of the paycheck doesn't matter. Now scale that principle to a $500 million Saudi contract. Ronaldo's image rights alone are worth billions globally. Every Nike ad, every EA sports deal, every commercial that runs in a taxable country creates a taxable event. Conservative estimates, using the actual tax treaty frameworks between Saudi Arabia, Portugal, and Spain, put his real tax exposure somewhere between $150 and $200 million over the life of the contract. The mechanics work like this. Saudi Arabia pays him tax-free. He invests that money. The investment returns get generated in jurisdictions with tax laws. The moment he touches that money in a taxable country, the clock starts. And currency plays a role most people completely ignore. The Saudi rial is pegged to the US dollar. If Ronaldo converts earnings to euros at the wrong time and the exchange rate moves, some countries will tax the currency gain itself as income. This is how athletes accidentally trigger what tax lawyers call a phantom income event. You didn't earn new money. You just moved old money through a currency conversion. But the government sees a gain on paper and taxes it. American athletes have it even worse. The United States taxes citizens on worldwide income no matter where they live, no matter where they earn it, no matter how long they've been gone. You can move to Dubai. The IRS still calls. LeBron James could theoretically sign a Saudi deal tomorrow, earn every dollar in a zero-tax country, and still owe the IRS a significant percentage of every single rial. The only escape is renouncing citizenship, and even then there's an exit tax. The real trap isn't the contract. The real trap is the assumption that low-tax destinations cancel out the obligations you build up over decades of high-tax country residency. They don't. Those obligations follow you. Tax advisors call this the trailing liability problem. The years you spent building your brand in Germany, France, England, the US, those countries retain claims on income streams rooted in what happened on their soil. So the Saudi deal isn't a scam. It isn't a mistake. It's genuinely the best option available. But $500 million in a tax haven is not $500 million in your pocket. For anyone. Ever. If you want to understand how the wealthiest people on earth actually protect their money, legally, structurally, across borders, subscribe. Because the next video breaks down the exact trust structures billionaires use that most people have never heard of. And tell me this in the comments. Do you think athletes like Ronaldo actually understand the tax math when they sign these deals? Or are they just trusting advisors who don't fully understand it either?